Hey, welcome back, my fellow watchers, my fellow YouTubers, my fellow financial hobbyists. My name is Dave, and today we're looking at M1 Finance. Once again, this is the last video of my M1 Finance tutorial for beginners and advanced users alike. And today, what are we going to go over? We are going to go over allocations, allocating your pies, allocating your various holdings, and also the rebalance feature that you should only use once per year, coming from not a financial advisor. That is not financial advice. That is just my 2 cents on the United States tax system. And yeah, let's go ahead and get started. So I wanted to go ahead and just make this video a little bit easier, so I switched over to my growth portfolio. You can see this is my lower portfolio, my not so serious one, and it has a few pies. We see here we have our ARK growth funds, market indexes, various REITs, ETFs, clean energy funds, next generation ETFs, and a pie that I'm actually in the process of trying to get rid of once it goes profitable again, and that is fintech. Eventually it won't have the fintech down here, and we'll look at it and see why. And also I want to show you one thing here that you may want to keep in mind when you're using M1 Finance. So let's take a look. Growth portfolio. For our ARK, we have 25% invested into ARK. And what is in ARK, you might ask? Well, that is all of their funds. 25% into the ARK Innovation, 15% into their various other ETFs, fintech, space, genomics, autonomous technology and AI, and next generation internet. So, if SpaceX ever offloads their satellite internet company, Spacelink, or what is it, Spacelink? Starlink? Yeah, Starlink. If they ever offload that into a separate company, and I believe Elon Musk did say that he wanted to do that and take that company public, and possibly do a pre-IPO share purchasing program for people that are invested into Tesla, hint hint, that you could possibly get into the Starlink. Anyways, Starlink will go into the next generation ETF if and when that happens. And you can see I'm all red. Ooh, ouch. So anyways, allocations. When you start getting into allocating, and it is after market trading windows, so we'll go ahead and do this because this is fairly simple. Let's go into fintech here. This is just a pie, like I mentioned, I'm going to be getting rid of in the future, 5 years or so, maybe. We'll see. But right now, I only have one company in this pie, and it's sitting at 100%. So any money going into this pie, let's say it's $100, and let's say all of these, the actual and targets here, this is like for ARK, you can see my overall portfolio is 2205. Well, 28.7% of that, or $634.22, is into ARK. That is over the target allocation of 25%. What does that mean? That means anything above $25 that gets automatically invested, it will choose the lower. It'll try to get everything to target first before it puts money into targets that are above the target level, into allocations that are above the target level. Yeah. So what will happen is it'll put money into the indexes first, and then it'll look into the clean energy funds, and then the next gen ETFs, and then it'll try to get those within the target percentage, and then it'll go to the next one higher. So it looks like it will be the REITs, and then it'll be FinTech, and then it'll be ARK. So I hope that makes sense. Let's move on to the next part. So let's say, hey, we're into FinTech. I saw this really cool company called Coinbase. I want to go ahead and put that into my FinTech companies. So let's go ahead and add that to the basket. I believe I did buy this on the day it IPO'd. Overall, the strategy is to get rid of individual companies and just go to ETFs. So Coinbase and SoFi are both in the ARK ETF FinTech fund. So that is the reasoning behind me getting rid of this particular pie. But anyways, moving on. So when we add something to the pie, initially you have to set your target allocation. So let's say I want SoFi, Coinbase, a little bit iffy. Here's the reason why I say it's iffy. And I don't know a whole lot about blockchain, Bitcoin, and things like that. But I'm not a financial advisor. I am not a money specialist or a digital currency specialist. However, here's how I see it playing out. In the future, banks, fintech companies, they will allow you to buy digital currency and hold on to that digital currency. Like Bitcoin, Ethereum. I don't see Dogecoin being a real thing because it was never meant to be a real currency. It is a quote-unquote meme stock. I don't think it's a real asset that you'll be able to use in the future. And by using it, I don't mean trading it to other people that like it, but using it as like buying something from the grocery store. Whereas like with Bitcoin and Ethereum, some companies are allowing you to use Bitcoin and Ethereum for online purchases. Very few and in between, because it's trying to get hashed out as of now. But how I see this playing out is these companies like Coinbase, which is a digital wallet. SoFi is trying to become a digital wallet. Right now, they are a college lending. They are a lending company, but they're trying to rebrand into a digital wallet. Sort of like what M1 Finance is if you use everything. The investments, the spending account, etc. So things like lending, borrowing, investing in the stock market, investing in digital currency, things like that. So you'll be able to, just like now, you can invest in currencies. So like the US dollar, the Japanese yen, the won, the peso, the Canadian dollar. You can do, and I forget what it's called, but you can basically trade money like they're stocks. Whatever. It's kind of out of the scope of this video anyways. So how I see it playing out is that you'll have these digital wallets where you can buy currencies. But what will happen is when you deposit money into it, it'll basically take that money and convert it into what's called a stable coin. A stable coin is basically an intermediary between like we'll say paper money, even though it's all digital now anyways, but normal currencies versus digital currencies. A stable coin is like an intermediary. So we'll just take US dollars. So $1 is one stable coin, which could be 0.001% of a Bitcoin. So that's kind of what the stable coins are. And you will be able to purchase items using stable coins instead of like Bitcoin and Ethereum. So that's kind of how I see it playing out. Especially if companies start paying their employees in stable coins rather than US dollars. Ideally, like let's say one US, I don't know the rate, but let's say $1 is, for the simplicity's sake, 50 cents in the Canadian dollar. So in Canada, let's say you get paid $1 or $2. So that is $1 US. You will get so for every dollar you get paid, you'll get paid like a half of a stable coin. 0.5 or 50%. So if you get paid $2 in Canadian currency, that will give you one stable coin, which will be like $1 US, etc. Blah blah blah. So that's kind of how I see it playing out. Is that we will have like a specific stable coin that all countries agree on using. And then that will relate to their currency, but then the underlying asset will be like Bitcoin or Ethereum. I'm hoping they go with Ethereum because it has some interesting things, but that's off topic. So anyways, just like how it is now, the reason why the US dollar is so prominent in economics worldwide is because its underlying asset and how it holds value is through oil. So that's kind of like, stable coins. I predict one stable coin, its underlying asset will be either Bitcoin or Ethereum, and people will start getting paid according to that. And how their currency matches up to the stable coin, and how that matches up to the underlying asset. Long story short, let's get back to M1 Finance. Now, let's say Coinbase. I'm not really too comfortable with Coinbase. I like SoFi a little bit better. So let's say 25-75 split. So 25% goes to Coinbase, 75% goes to SoFi. Perfect. Alright, so we'll go ahead and confirm the changes here. But, oh no, look at this. Now my actual holdings for this pie is $125.96. 100% of that is in a SoFi. But, it's that time of year. I'm not really worried about taxes. What I can do is I can hit this rebalance button here. And what this does is, during the next trade window, M1 will buy underweight slices and sell overweight slices to bring your pie back to its targets within equilibrium. this does initiate taxable events. So I will refer you to your tax lawyer, your tax specialist, because I am not a taxologist, if that is a thing. Who does your taxes? Anyways, I'm not HR Block or whatever. Anyways, yeah, let's go ahead and do this because we can always cancel it. So it'll bring it, 75%, 25%. If we look at the details, we can see we have a pending rebalance of this particular pie. One sell, one buy. We'll keep it simple. $31, $31. Okay. Let's cancel the rebalance. We'll do an edit. What's another? PayPal. PayPal's fintech. Add the basket. Alright, so PayPal, 50. Alright, so I went ahead and added PayPal to our SoFi and Coinbase and fintech pie here, but PayPal has a longer history than SoFi and Coinbase. So I want to go ahead and put more money into PayPal. 35 into SoFi, 15 into Coinbase. We'll go ahead and save that. We'll confirm it. And we can see that since I canceled that other rebalance, we can see that, hey, we do a rebalance here. And the reason why I'm doing this is so you can kind of see how it's allocating. So to get SoFi to its 35% allocation, it's going to sell $81.88, and then it's going to buy $62.98 into PayPal and $18.89 into Coinbase, and that'll bring all three of those into the allocated equilibrium. So hope that makes sense. Now the taxable events, let's go ahead and alright, so let's say you have 50 stocks here and you don't want to go through and do the math and kind of like, let's say you want everything to be even. You can actually select all and hit equalize, and it'll put equal values to all of your stocks. In this case, there's only one, so 100%. We'll save that. Alright, so that's back to normal. Yeah, it's showing a rebalance icon because it hasn't canceled the rebalance yet. Probably it'll take a few minutes to refresh. Let's see if we can manually refresh it. Blah, didn't. Alright, so let's say I was talking about like taxable events. Once you start getting into a good amount of holdings and you do a rebalance, it will create a taxable event for every stock that is overweight and that is sold. So just keep that in mind. You have different, and this is as far as U.S. tax law, you have different tax rates depending if you've held on to a stock for less than a year is a higher tax rate than if you've held on to it for more than a year. I believe it's like 30% for 1 year or lower, and then it's like 2%, something ridiculous if it's over a year. I don't know for sure. That's something for you to look up on Google, is the tax rates, or you can talk with your I would say a taxologist, the one that, your H&R Block taxologist. You can talk to them and find out about the tax rates when it comes to short versus long positions, holding. Dividends also are taxable events. So, yeah. But we'll go ahead and we'll end this video here. Just to do a small recap, I went through pretty much all of M1 Finance and what you can do with it, how you get it set up from your initial initial pies to sub pies to doing research to looking at your activity holdings tab. We looked at the funding history tab. We looked at the M1 spend account, borrow. We did some research. We did some money transfers. We set up some rules, some smart transfers. We looked at allocations. Finally, we looked at rebalancing as well as trade windows. So yeah, this is pretty much how you use M1 Finance in a nutshell. If you have any questions, comments, concerns, please go ahead, ask me below. Not really a huge channel. I don't have 1 million subscribers or anything, but hey, if you want, go ahead and like and subscribe. If you found this tutorial series helpful in any way. Also, I'll do another series where we look at my various portfolios, why I chose stocks, why I chose the allocations that I did, my goals, concerns, and the overall my FIRE movement. I don't know if anybody else is doing this, but it's my FIRE. Hey, that might be a thing. My financial independence, retire when I'm dead. That would be fired. I'm fired? What? No, boss. I don't want to be fired. Anyways, hope you enjoyed. You take care. Thanks a lot. Bye.